guys, we're back again. Cover some more topics this week with David and I. First thing I think we wanted to touch on is just now that GME and everything is kind of dead, we just can look at the big picture of the whole chart pattern and give you guys an idea what's going on. And then I want to touch on a couple other stocks actually that this week ran up between 400 and what do I have here? 400 up to like over 1,000%. So same kind of thing as GME. It's just nobody's talking about it, just to kind of justify that you don't want to get excited about these things and just learn how to play them because they do happen more often than you think. And then I think David's going to go over some other stuff that he's picked up along the way. If you want to touch on that quick.
Yeah, kind of relating to the GME thing. I wanted to show my charts for XPeng. It's an EV electric vehicle company, and I bought in early and I sold early, and it spiked up, and I wanted to go through that whole story. And then I had a few anecdotes that I got from some books that I thought might be good mental exercises for traders.
All right, cool. All right, so Sam, if you wouldn't mind pulling up my chart here, and we can just kind of take a look at GME. All right, so obviously I'm sure most of you guys have already seen this chart. This is GME on the daily. So, the run started down here around 40. Well, I guess you could argue it started down here around $20, but consolidated for a while, and $40 is kind of really when it took off, went up to, the 500 for roughly 1,000 or so percent increase. This one's really messy. Like if you look at these candles, like that's not a nice clean chart by any stretch of the imagination. That's just because of how much hype and everything went into it. But the bottom line is like we were telling you, I think even back on like this one red day here, everyone was asking if they should buy it and hold it forever. And we were telling everyone no, and it's going to come back down to nothing. And, sure as hell, it came back down to $50 down. It's probably just going to keep coming down. You might get some odd little bounces on it, but nothing too crazy at this point. So I'm just going to open.
I wanted to mention something funny about the price. So I actually tried charting it the other day, and because the price move is so parabolic, you're going from like $17 to like 500. The Fibonacci tool actually doesn't work when you're trying to use it. It doesn't expand correctly.
Oh, really?
It just can't, like TradingView just can't do the calculation.
That's hilarious. Yeah, it's probably a good sign that it's not good to play. Yeah. So this is like I like to use the line chart. A lot of people don't because you do miss out on some details like on these tops and stuff. Right here, for example. Actually, the most recent one I think is probably easiest. So right down here, if you look at this day, which was the last day it traded, the top of this wick shows 87.60. But if we go to the actual 1 minute chart, this is on Friday, it went up to $95. So we're like $7 or so out of range on that. But the nice thing about the line charts and the reason why I use it to draw on a lot of my resistance levels is it's just anytime you see like a bottom or a top on a line, that's usually a better indicator of where support and resistance is over those little wicks, because those things don't really hold as much value. That's just something that I've noticed. And I know like some traders like using line charts, some traders hate it. For me, I've just found it really easy. So just to talk about, the whole kind of setup of it. So you get this big run up here, and the key that you really want to look at on these kind of moves, I'm gonna show you guys a couple after that are a little bit cleaner, but obviously this is the one that everybody knows, is really identifying the front side of the move versus the back side. And what we mean by that is essentially the front side of the move is when the longs are in control and they're pushing the stock up, shorts are being squeezed. So that's a time when you have to really take a lot of caution if you're shorting, and you can be a little bit more aggressive if you're going long. So if you're shorting like this move here, for example, just, way back to like a week or 2 weeks or so ago, we spiked up from $95, went straight up to, 230. So like this type of move, this is all front side. Like there's nothing in that's indicated that the stock's broken down. So if you see something like this and, it spikes up to, here at 236, and then it comes down here to 209, and then it bounces up, you can see right there to 226. If you're going to short this bounce on 226, don't just hold that and expect it to sell all the way off, because there's been no key resistance or support levels that have been broken to indicate that stock's coming right down. Like from my perspective, just to show you guys what I see, like this line right here at 197, I would consider that basically like the end of the stock. Like that's what I would call, the stock's dead basically after that. You might say, why not up here? You can see this bottom right here, this bottom right there, up here. But like these kind of things, you really want to look at the big picture. And for me, I'm just looking back here. Okay, we have this huge day, we have a big run up, and then we get our first big crash. So it crashes down, hits right off of that, 196, 197 area, and then it continues on the upside. So even this big crash, I wouldn't consider that backside in the move, because I would be looking for basically a break below this area. Keeps going up. This move right here, I want to zoom into this. If you just give me a second here, because obviously that went below where I'm drawing my line. But that was this day here. So if we zoom in on that, you can see all these little bars here. These are all halts. So on this day, it was basically, like we had this sell-off pre-market, and then in the open, it shot up, and it was literally, I think we were getting 1 or 2 minute candles, and it was halting, 1 or 2 minute candles halting, 1 or 2 minute candles halting, all the way up and all the way back down. That, to me, like just personally, I know some guys read it a little different, but to me, that just makes a lot of those levels not completely invalid, but they just make them a little bit less of an interest for me for support and resistance. Because anytime a stock halts, there's a couple things that happen. A lot of people get messages, like you can set indicators that tells you when anytime a stock halts. So when that happens, a lot more people are going to come and watch it. It's going to change the price action. It also changes the time frame. So if a stock halts for 5 minutes, opens, halts for 5 minutes, opens, it's kind of extending. 9:30 to 10:30 is really the high volume time of the day. So if you get outside of that, things kind of start to waver off a little bit, and that just like extends that time frame, and it just makes the whole system on these kind of plays really messy, in my own personal opinion. So that's why I don't really consider this too much of a level. So if we go back again to the line chart here and pull that out. So yeah, if we draw a line in here, right at 196, that would be, if I was to short this, I couldn't because my broker restricted it, but if I was to short this, that would be like the main level I'd be looking at. Like, just the idea really on these guys is, because you can see the kind of range they have. You really don't need to get in up here to try and start shorting. You don't need to fight this thing all the way down. Wait till it's, worn everybody out. It's mental capital is just killing you. Wait till the thing actually breaks, and then you can start shorting the downside. If you're long, then you can be pretty aggressive on the front side, and there's no reason to absolutely panic and sell unless a key level breaks again. So like for me, again, like this is a key level on this day right here. So maybe on this day, if I did decide to go long, it bounces up, came back close to this level. Maybe I went long here at 211. I'd be roughly risking off of this 197. So if it cut below that, that's probably where I'd cut my loss. And you can keep buying and selling on the way up or whatever, but the key is you really want to identify those major levels as to where the stock is going to be broken or it's not going to be broken. So as soon as it got below that line, that's when you can see it real, like everything just faded right off. Like this was the first day that we had, real strong selling pressure. I guess you could argue with this day back here, but if you take a look at the bottom, look at the volume on that day. So we had selling all day, but the volume is relatively low. This day we had selling all day again, but we had way higher volume. And the reason for that is because it's broken this, this death line right here. So this is when everybody's panicking now. So anybody that really knows how to read this stuff, this is why you're getting all this volume, is because everyone's seeing that and they're going, oh crap. So this is now everybody's selling, everybody's shorting, and they're just pumping this thing down because they know that key level is broken. So that's kind of the main thing you want to look at. And then basically after that, you're really just looking to short any kind of pop into any level of resistance. Like once that happens, you're pretty safe to throw some size on this thing short. I mean, you can zoom in, draw your levels anywhere you want. Like this day here, you could just look at this chart, say, maybe draw a line there. Again, you can't see it on this line chart, but this actually wicked up into 120. So you would have been executed there for, a $10, $20, $30, $40 short roughly. Even on this day here, that's another good one. Like these days are tough because they just kind of trade off. You can't really, you never want to try and short and chase into weakness. You want to try and short into a bounce into resistance. So on this last day here, this was the last time we got a really good shove, $50 up to, like I showed you on the thing, it went up to 97 or so. So, you draw your resistance lines in, I'd say probably right there, right where that base is. You can see it touched right here, here, sat under it there. So there's a lot of levels right there. So 85 is maybe where I'd start considering short. Next level I see is probably kind of these tops right here. And then you get all that consolidation around it through here. So maybe 95, and then above that, you're probably looking at, 90, I don't know, maybe $100. Yeah, probably right around $100. And then above that, 108. But this kind of consolidation, like when you have a whole day like this, where it's basically going sideways through all these levels, that's a really good area to start drawing your lines off of, because you have all that dense price action. So it makes it easier to draw your lines and create risk, because if it does blow right through and it blows through all of this kind of volume that's just stuck in this area, then that's a really good indicator that, the trade's not going to go your way and it could continue back up. But that's a pretty safe place to start short. And then as you can see, if we go to the 1 minute chart here on the morning, yeah, look at that. So this would have been our starter, and it hit within, I don't know, 20 cents of that other line we drew. So you can get really, really, really good executions on these, cover on the way down. You're not holding these for the big fades, because sometimes there's always a chance they can reclaim, but that's pretty much the way to read these things. Does that make sense, David?
Yeah, I want to point out to people that the media's got it wrong. There's nothing wrong with short selling. It's not evil. It's what people do with it. It's like a hammer. It's like a tool. It's a very useful tool in markets, actually. But if people decide to short a company and then go in the media and blast the company with lies, like they did with Tesla for like 3 years, saying their cars don't work, they're not profitable, blah blah. Obviously, it's one of the most shorted stocks, right? That's bullshit. That stuff needs to stop. Shorting a stock 140% of its float needs to stop, but the act of shorting doesn't need to stop. So
yeah, that's the thing too, is a lot of people don't realize is it would totally change the price action for longs and shorts, right? Like I know we were talking about this the other day, is even if you're a long bias trader, if you didn't have shorts, GME never would have happened, because GME, the only reason it moved like that was because it was a short squeeze. So you're not getting nearly as many plays.
Yeah, not only that, like as a guy, because my trading, I tend to like to catch knives, like catch a falling price. It's because the shorts that there's actually a bottom, right? If everybody decided, oh, I made enough money on this thing, and they started a landslide, an avalanche of selling pressure, who decides where to buy, right? It's the first guys to think about a price that an exit is the short sellers. So like, well, if this thing starts going down, where do I take profit, right? So those little spikes up after a big dump, those are mostly short sellers. And if enough of them take profit, then you start creating a reversal pattern.
Right. And then once it gets back up over some key levels, that's when it can start going way to the upside again, right?
Yep. So we go bull from bear to go bull again. So it's very useful to be in the markets.
Yeah. That's why drawing these support and resistance levels are so key. It's just all you're doing is looking at, tops and bottoms on the chart that are pretty easily discernible. And that's basically what you're going to look into. I mean, everybody else is going to see the same lines you are. So all you have to do is, like I just drew 5 or 6 lines there on GME. So, pick whatever lines you want to risk off of. If you want to pick all 5, and you're going short, then, if you want to do 100 shares, say, you just do 20, 20 on each line, work your way up, get a nice even spread on it. If you're only thinking about shorting in the first 2, and if it goes past the third, you think it's going to keep going up, then you can short more size on the bottom and cut it after the third line. It's really up to you as the trader, what you want to risk off of, and where you really want to put your size off, and where you're going to consider your particular trade thesis, invalid. Because the reality is too, like, so many people have different ideas, right? Like some people might be trying to fade this thing all day long. Some people are just trying to look for a quick, 2-minute scalp. Some people are trying to, trade around a core position. So like a lot of those lines are potentially going to be broken. That might, invalidate a certain trade idea, but they might still be fine for another one. So it's just really sticking to what your exact plan is. If I'm like, Sam, if you wouldn't mind just pulling the chart back up here. Like, let's say my plan, if we go, let's just go to here, I'll just zoom out the chart a bit. So these are the lines that we drew in, right? Oh, yeah. So these are the lines that I drew in there. So, like, let's say I was trying to, like I said, short, up on these 4 lines here, 80 shares, say, or something like that. I do 20 here, 20 here, 20 here, 20 here. And then, I would maybe cut it, say at 112 or something like that, right? Like that would be how I'd play that. But let's say I was thinking it really wasn't going to go past 95, then, maybe I'd do 40 shares here and 40 shares here. And then if it got to 98, then maybe I'd cut it, because I think if it goes over 100, it's just going to keep going, right? So it's really up to you how you want to play these things. But the bottom line is you just have to have a plan and size in according to that plan and cut it when you were going to cut it. Because as soon as if you're going to put 80 shares on this and you go, okay, short 40, and then you're going to cut it just around 100, and then it gets to 101, this next line, and you're like, no, it's like maybe it will go to 101 and I'll come back down. You throw another 20 on, and then it goes up to the next line, and you're like, oh, well, I still got lines up there, so put a little bit more up here, keep trying to bring up the, like, that's when short squeezes happen, is because you keep trying to average up, and then all of a sudden, next thing you know, you're just burying yourself, and the thing takes off, and you're covering into strength, and it's a disaster. So
Yeah.
again, we say it all the time, as risk management, right?
Yeah, and one of the biggest, I don't want to say scams, one of the most unfair things a lot of the brokerages do, they give you leverage, first of all, and then they attract the kind of people that don't have a lot of money to begin with. You put a few $1,000s, it's meaningful to you, right? But a few $1,000s to trade with in the market is nothing. And then so you're incentivized to use the leverage, and what happens is your account can only go negative a certain percentage before it's blown up, because of how much money you've borrowed, right? So it's really easy to go short, use leverage, and if that thing moves like 1%, 2% against you, that goes you $2,000, because you're trying to hold like a $5,000 position, right? So definitely not a good idea to play anything with margin, or even shorting if you're a beginner trader.
Mm-hmm. Yeah, like I always trade, like, on the long side, I only trade cash, like whatever's in my account. I've never leveraged anything. The short side, you have to leverage to a degree, because you can't, I don't even think you can short on a cash account, but you have to, so you have to be on a margin account. So it's, technically you're using leverage, but like I'm still never using leverage. I'm only using the money I have in my account. So, if the stock moves 1%, then my actual account has lost 1%. It's not like I'm losing, 10 times my investment or whatever.
Yeah, you definitely have to exercise some self-control there, because once you put in like $1,000 in there, you go, oh, you're going to give me 3-to-1 so I can hold $3,000 for the positions? Like, that's such a great deal.
Yeah, exactly.
Right. So there's a lot of people losing money in the markets just doing that, like a lot of people.
Yeah.
There's actually, I forgot, I just was listening to a stat last week. This guy used to work for one of these firms, these brokerages that gave people leverage. It was like a Forex firm. Okay. And the way they look at customers was, I think it was retention rate. They have something like a 20% retention rate. So 80% of their clients blow out within a year.
Wow. All right. So this is SAVA. They're like a healthcare company, I guess. They came out with some news on February 2nd about like some Alzheimer's disease trial thing they had going on. I don't really read too much into the news. I don't really care that much about that stuff. Bottom line, the only reason I really want to show you guys this trade is because, look at it. It went from, $25 up to, 140 almost at the high. And you probably didn't really hear anyone talking about this unless you're like an active trader. So that's, what, 600-700% roughly in, 2 days it's gone up. So this is just another example of, stuff like GME, like it happens, like, not like markets are crazy right now. So there's a lot more of this happening, but like this is, I would say, pretty much a weekly occurrence for the most part in day trading these small cap companies. So that's why when, you see everyone getting excited over stuff like GME and thinking they're going to throw all their money into it, it's just like, man, like just don't do it, because this is what happens every time they come back down, right? So we'll dive into the same thing. I'll open the line chart again just because, I think it's the easiest way to really see the kind of the big picture on these.
By the way, is this Interactive Brokers platform?
Yeah, this is Interactive Bro. I just have my this is my paper trading account because I don't want everyone to see my account number. But yeah, this is Interactive Brokers. It's I've been using it for a long time. It's it's pretty user friendly. I like it. I'm thinking about getting DOS Trader Pro soon. It's like it's just like quicker feed times, and you can link your account, like link more accounts to it and stuff. It's you have to pay for it though. It's like $125 a month or something like that. But it's a really good software. So I'm thinking about, kind of upgrading to that soon. But Interactive Brokers is easily my favorite that I've used so far.
Wait, so does that mean you have to pay for 2 data feeds then? One for the DOS software, one for Interactive?
I haven't looked too much into it, but I believe so. Yeah. Like you have to pay the 120 or so bucks just to use the software. And then you're paying for your feed as well. Look
at this baller. Like money shorting.
Nah, I'm just picky. Yeah, so again, this is a much cleaner chart than GME, but it's really the same principle. So, again, first thing, this is our first day here. You got your big volume, comes up all front side, right? You get this big pullback here. Still, I really wouldn't consider this backside of the move overall. Like it's backside of this extension here, but it's not backside of the move. I really wouldn't consider this backside personally until it broke I would say this level down here, just like in the day. So if it broke that 35 level, because if we kind of zoom in on that, let's get a little bit closer. See, that's, you know, maybe even lower actually, maybe even like the 33 area down there. Because those are really, you know, like the way these moves usually work is you get some news comes out or whatever, you get this big run up and then a pullback, and that initial pullback is really kind of like the end game for the stock. So that's anything under that is really safe to short. This one obviously extended pretty far. So like, you know, if it's up at $72, I'm really not waiting for it to come down to $30 before I start short. So you'd look for kind of like a more of a short-term break on this uptrend pattern here. And on this one, we got a double top and then it kind of cracked down. So if we zoom in on that, again, this is why I like the line chart. So this top here, get this big run up, and then, you know, you can just draw your line right there. You see that little pullback right there, and then the bigger one here. So as soon as that level broke, I would call that kind of like, you know, a short-term breakdown. Comes down, bounces right back up into that line within a buck or two, and then, you know, you get a fade off. So again, these are still overall front side. So like for me personally, I'd probably short into this line, and I would cover into these two bottoms right here, you know, $63 and $62. I wouldn't really be looking to fade this all the way back down to the VWAP line. Just because like I've seen many times where it does this, comes down at this level and then just carries on back up, right? Like you don't really want to try and hold these and fade these all the way back down to the bottom until you see like a really clear change in direction on the stock. So we'll go to the bigger picture here. Again, the only reason I'm showing you guys this is just to kind of, you know, just prove that this stuff happens a lot. So if you see one going up 500%, don't get all excited and throw all your money into it. Just watch it, study it, you know, save the pictures, save these line charts or candle charts, whatever you like to look at. You know, wait for your entry on the pattern.
Yeah, I was telling Sam, like spend all day backtesting charts, just drawing resistance and support lines, looking at the chart patterns, just learning to recognize them. Because you're staring at this, you probably will never learn. So you have to get active and just start drawing.
Yeah, it's so different too when you're actually watching in real time. Like, you know, like I usually spend like 3-4 hours a night just going over all the charts for the day, just reviewing my old trades from weeks ago. Like, you know, I spend a lot of time on the computer just looking at charts, watching price action, just because it's you really, in the moment, you really have to, you know, it's fine for me to say, oh yeah, you know, look, it did this, it came up, it went right into that line, it came down. Like everybody who's never traded a stock before can see that clear as day. But when you're watching it actually happen, it's completely different. You know, you're watching the candles flick around, you get these little wicks and these little snaps, and it's just you got to really just get that screen time. I mean, just to understand, like, there's a lot of, I don't know, it's weird, but there's a lot of intuition. Like, you know, when you're watching a chart, like I've had times where I've cut a position just because it didn't even necessarily hit my risk. It just didn't feel right. Like I just didn't like the way the chart was moving. Yeah. I was like, it's just something just feels wrong. And I just take my loss, cut it, and then, you know, it rips in the opposite direction, or maybe it carries on in the right direction, and that's fine too. Because, you know, if something didn't feel, I don't want to be stressed in a trade is the bottom line. Like if something doesn't feel right and I feel my blood pressure going up, I'm already thinking that I'm starting to make some wrong mistakes. So I usually just kind of cut it at that point. This one here. So after you get these big run-ups, where's our end of day here? 16. So it looks like our, you know, our close is, I think that's it right there, actually, the close of that day. So this was our last green day, and that line I just drew is basically right where the close price was. So the next morning, this includes after hours and pre-market too, by the way, guys. So if you look at the time down at the bottom here, 16 is 4 o'clock, so that's market close. So this is all after hours, this whole move up. So that's what we call a gap up, right? And then this is the next day. So this right here is actually like a beautiful, beautiful setup. If you look at that, you know, you get this big run up. It's really steep, big overextension, gaps up in the morning. And this is kind of the thing that we're looking at the short. So if you look here, you know, pre-market, it opens right around 116, and then it kind of spikes up, fades off. You know, it's under VWAP all pre-market. It's really weak, right? Like that's a weak chart. It's selling basically all morning after that pop. It's had this big run up. So you know that all these guys that bought long are looking to sell because they've just made a ton of money, right? Like even if you bought at the close, you bought at $85, now it's up to 130, right? Like that's a lot of gains. So like the best place, like what I'd be looking for is a break at this level right here, this 114, because that's basically, you know, if you look at the day before, that's kind of where we bottomed out. It kind of shot back through that line, sat on it, Next morning, that's right where it opened, spiked up. We had this sell off here, 7 o'clock. 7 o'clock, 8 o'clock, and 9 o'clock are all different time frames when different brokers will come in. Like 9 o'clock, we always laugh because that's like, the Robinhooders are just waking up because 9 o'clock is when you can trade on Robinhood. So every morning, whatever stock is, hot in play or whatever, at 9 o'clock, like clockwork, you just see, all this buying start to come in on these junk stocks, and then, they'll crash or do whatever because that's all the Robinhood traders. But 7 o'clock.
You know what I just noticed?
Yeah.
The peak, I think it starts at either, is that 10 or 9:30, like where it valleys and then peaks all the way up to like 12-ish?
Yeah, so the open is right here, like right on this bottom, basically. It just dipped on the open and then shot up.
That's one of my favorite indicators of looking at volume to let me know that a run has basically had its course, because even though the price actually was moving up, the volume was declining. So that's right. When you know the buying power, the force, the momentum is losing steam.
Yeah. So that's what David's saying right down here. This is the volume. You can see, right out of the gate, really high, up over 300,000 shares, and then it just tapers off. But as you can see, as this volume kind of tapers off, the stock is still in that uptrend, right? And then it tapers off all the way down through this selling. So like this is again what I'm saying is, you want to wait for these bounces. Like this thing pre-market, it came down to, $92, opened around 100. Sold off really quick, right? Like, it opened around $100, sold off quick to $93. So a lot of people are going to think, oh man, this thing's selling like crazy. Let's, short it, chase it down. And then boom, it shoots right back up to 115. So you never want to chase weakness. One way you could short that basically is this bottom right here, pre-market, 92.20. If that did really snap that line, maybe bounce off this 85 line and come back into it, you could probably short that bounce. But you never ever want to just, there's nothing in here. There's no levels in here. You don't want to just chase that thing down, right? Wait for it to come up. It's clear as day. You have your pre-market. That's where it's open, shot up. That's where it bounced off again. And then when it broke that pre-market, it was just like selling all the way down. So when it comes back up into that, you can pretty comfortably short this. And then this is, once you break this 85 line, that's the close from the prior day. So these are one of those things where, you put a little bit of size up here, short it down, play these bounces all the way down. And once it breaks this, like once it goes red, that's when you can really, pile the size on. And you can see again, it bounced right off the 67 line, which we drew, I believe, back here on these tops. So, and then again, it's pretty straightforward. Once you get into the trade, you just draw your lines. Like I always start left and I work my way right. So if I'm looking over here, this top, that first day, draw your line right there and look at that. 3 days later, it bottomed almost to the penny on that. And then it held again over here on the way up, I'd say probably somewhere in this $53 range, maybe something like that. Kind of got a top into it, bounced off it twice, and then look at that. You look over here, that's where it sold off to, bounced right off that line again, right up into this next line, bounced down into this line again. It's just back and forth. So that's why I really like the line chart. It's really easy to read that kind of stuff. Again, it's like we said, it's straightforward when you're just looking at it like this, but you don't just want to start, throwing a whole bunch of size on these things until you really sit down and, you look at the candle charts, see how these things are actually playing out. It's a lot more, exciting. There's a lot more, there's variance. Like look at this one, for example, it came down $52. It went down to $48. So it went quite a ways through the line. But still, it consolidated around it and shot back up. So if you're just saying, oh, I'm going to, put my thing here, put my size there, and I'm going to cut it, a buck below, then you would have gotten knocked out even though your original thesis was correct. So it's really just the screen time on that kind of stuff. There's a couple more. Yeah, I want to show you guys this one too. AACG. This one was about a 14 or so 100% gainer, I believe. Just load that. Yeah, so this is the daily chart here. Closed the one day at $1.40, opened at 368, shot all the way up to $20 basically, and then the next day, as we expect, gaps down, sells off. Like it's all the same story. So I'm not gonna dig too much into this one. It's basically the same idea, but again, it's a 1,400% run in one day. So this kind of stuff happens. Just only way to be prepared is just to learn and study them. Same idea again, right? Like first day, I'm not shorting this thing until it breaks, until it breaks that base right there. That's where the low is. That's where the stock bottom. So I wouldn't even touch this until that line broke, and it didn't break. So, we don't touch it. And then just draw your lines all the way up, right? We got our top right here. That's kind of where it shot up, consolidated under that line, shot up through, and then you're gonna just do that all the way along, right? Draw a line there, maybe some resistance there, some there. Look at these two spots here. Oh, that's a vertical line. Right around this. And yeah, so that's that's really how it goes. I mean, it's pretty quick, pretty easy. This one basically just essentially just died right out of the gate. So if you look at it though, like this is kind of the area where I'd want to short again. So if we go, I'm just going to open this so you can see the pre-market action. It's on the daily. Yeah, there we go. Yeah, so again, it's the same idea. The stocks, it shot way up yesterday. I don't know why my volume looks like that. That's not that's not right. There we go. Yeah, so shot way up yesterday. Came down. It sold way off. Where's the close? Closes right around here. So after hours, it actually sold off after hours, gapped down. So when it gaps down, that everybody's going to be panicking. All the longs are going to want to get out, right? So that's kind of why you see this here. This pre-market level is pretty important. It always is, which is the the base on pre-market. So that's a pretty good level there. This line, I would probably adjust that, something like that. Again, it's the same thing we talked about in GME though, only on a smaller time frame, right? Like you get this kind of consolidation sideways like that. Like that's a lot of price movement in this area. So that's kind of like where I'd be looking. If it went up over this, I personally wouldn't want to be getting short. I'd take the loss if I was already into it. But these are lines I would use. And then this is pre-market again. I don't trade pre-market. So this spike up into this area was pre-market, and then the open was right about here. So it basically just tanked out of the open. That's when you can short back up into this base level pretty comfortably. And then this one here, 825 or so, 820, the low of pre-market. That's like, you can see, I mean, once it breaks that, the stock, it just dies completely. Like it's game over. So I'll just show on the candle chart as well, because I know a lot of people might find that a little bit easier to read. Yeah, so like, pretty clear, like almost to the penny on the lines. This is pre-market again, so opens here, tanks down, touches that line almost perfectly from pre-market. And then this one actually halted a couple times. That's what these little sideways dashes are. It's a volatility halt. So basically if the price moves too quick and too short a time frame, it just gets halted to, I don't know, essentially let everyone cool off, for lack of a better term. But then it comes right back down to that same pre-market base again. And as soon as it breaks it, it sits under here for a couple minutes, like right in there, I would be throwing 100% size on that for sure, and just covering into this next line down. That's my favorite play right there. And then I would just, I'd probably risk like just over 850 personally, just because like to me, if I see this, if I see this kind of action and I see that die and it sits under there and then all of a sudden it reclaims, like to me, that's like, even if it comes back down, that's not the setup I'm looking for. So I'd be out on that personally. But this is, again, look for those lines. As soon as it gets under those lines, you want clear indication the stock is basically toast, and that's when you can start shorting. I don't long really ever in the morning, so that's why I'm always just talking about shorts here, guys. So if you're a long trader, I'm sorry, but I mean the idea is the same, really. I mean, you just draw in your levels, pick your points where, on the long side, you want to pick a point where the stock is strong, where it's reversing, where shorts are going to be getting scared, they're going to start covering. On the short side, we want to look for places that longs are going to be scared, longs are going to start selling. You're looking for the breakdowns versus the breakouts. So yeah, that's pretty much it. I don't want to go too much more into detail on these. I just wanted to give a couple examples from this week of stocks that were going, 500, 1,000%, because it happens a lot. So just keep an eye out for them, study them, and learn from them. Then you can take advantage of them.
Yeah. How do you find the stocks? You use a scanner, right?
Yeah, I use stockcharts.com.
So it's free.
Well, stock charts itself is free, but you have to pay to use the scanner. It's like, it's like $25 or $30 a month or something like that. But it's a really good scanner because you can actually set your own parameters. So like, on like FinViz or like your broker or something like that, they're like, okay, trade count, percentage gain, like it gives you specific things that you can adjust. But on stock charts, you actually write your own code, so you can scan for like literally anything you can think of. Like I can scan for, I don't know, there's other scanners that do the same thing, but you can scan for like dollar value, you can scan for like yesterday's close plus $4, like anything you can think of, you can scan for.
Yeah, so it's like percentage and price changes, whatever that you want to look for.
Yeah, exactly. Like you actually type in your own code into a big like Excel box basically. So it makes it a lot easier to just weed everything out.
Cool, very cool. Just following that, I'm going to show XPeng real quick because I know people FOMO buy stocks, and I can just show you what you do if you miss a buy. Sam, can you pull up my screen? Okay, and this is the chart for XPeng. Some of you guys might know them. They're an electric car company. This is TradingView. This is the app that I use. It's like $150 US a year. Well, you can get the free version. It just doesn't have some of the tools, but stuff like the watch list and the main tools I'm going to show you just now, those are there with the free version. So anyway, what I wanted to say was there's a couple things that I did. A buddy of mine, it was actually Blake from last week's episode that told me about this stock, and he told me like they just IPO'd and he was buying it, and I think I bought it in around $18 around this point here. Whoops, wrong arrow. So I bought it in around this time here, about $18, and it went up. Let's see, it went up. I think. Whoops, technical problems. I'm not used to this keyboard. There we go. So it went up 25%. So I sold at the top here, and it dipped down. I was like, oh, thank God. And this was around this was around the election time. So I think the price started selling off. But I think something in the news hit, and they took off and actually did a, what is that? Almost a 3x. So 3 times within 30 days, 21 bars. Yeah, 30 days. So yeah. So like most people will look at this and they might be foaming and buying it on the way up. I just kind of let it take off. I thought it was rich here, so I thought, okay, maybe I'll buy this pullback. I waited. It wasn't enough. Usually I'll wait for like a pullback to the breakout. So it broke out here. That's where I'd feel safe buying it. Here's even more conservative, but where this broke out, that's where I feel safe buying it. It never pulled back. It just kept going up all the way to, what's that, $75 almost. So what I do is I usually watch it. And when you're going forward in time, you don't know what's going to happen next, but you're going to see this bar, and then you're going to see this bar, and then you're going to see these two. And then once you have at least 3 to 4 consecutive red days where it closed lower, that's why they're red, then you kind of know the top is in, and you see this pull back to the top here. So at this point, that's when I decided, all right, now it's time to look for entries. So what I did was I used my Fibonacci tool, and I went to the beginning of the rally to the top of the rally. And what you'll find is levels to buy in at. So I saw it look, it crashed down, hit the 50% level, went back up, oscillated a little bit, crashed right at the 65% level, and made its way back up. And now it's right at the 50% level. So what I did was I'm a cheap bastard. So then you could buy in at any of these levels. It depends on how bullish this asset is. But considering how strongly it sold, it got bought up, I figured it's going to sell off just as hard. So a hard sell off is at 618 level. When a stock starts to retrace in the 70s and the 80s, it's probably a dying company. And then if you put this chart on GameStop, you probably see it around here right now, 88% retracement. So it's a dying company. So I put my buy order here, the 618 to 65% level. That's my favorite. I got in at, I think it was $38. Yeah, right there. And I just rode that thing up. This is a very, very, very powerful, very, very underutilized tool, and you can customize it too.
I just want to point out really quick too, just like because we were talking about the lines and resistance and stuff. If you look at the very start of that run, you see where it had those first like 3 red days.
These ones? Oh, these ones.
Yeah. So like right at the top of that candle right there is basically right in where you were setting your buy orders based on the Fibonacci's as well.
For
that dip there.
If you buy the way up?
No, on the way back down. Like if you drew a line across, right?
Oh yeah, so it matches perfectly, right?
Yeah, yeah, 'cause like
Yeah,
that's the way that I read charts, right?
this
So
bottom is this top, right? Exactly.
yeah.
Yeah, that's why I freaking love this tool. It's so powerful.
Hmm.
Get rid of that. But you can set your own numbers too. Like a lot of these numbers are custom. Like there is no 65%. I added that on my own. So you could turn these colors on and off. You can change the colors as you like. I like to keep them at yellow because I find that the 65 and the 618, it usually pierces the 618 into the 65%. So like that's like my favorite range to buy in. That's when I know it's a healthy pullback. And then what you want to do is you want to set your stop below that, because if it goes dips below this, like I said, it's going to be a dying company. So yeah, and what I did was in terms of taking profit, I took profit around, I think this level was like 50 something bucks. Yeah, I took profit around here, 52 bucks. So it was a nice, what, I think 50% swing, 38% swing. And I sold half my position here, and I'm waiting for a pullback, and I'm going to buy in probably just below this, right around this level, 40. I have an order out at 45.75. So yeah, that's all. Like this was like what? Not FOMOing. All I had to do was wait 63 days, 2 months. Not even, sorry. I bought in here. All I had to do was wait a full 36 days, and I got a 36% return on this asset. So yeah, you don't have to FOMO, guys, and it doesn't always hit, but this is way better than chasing. And then, when you're in a position, I know all of you guys that bought GameStop are just watching your phone or watching the computer all day long, like just going, come on, come on, come on. You're happy when it's going up, and you're going fuck, 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 fuck when it's going down. Like that's not really trading. Like it might be fun once in a while, but that's not. You want to be stone cold when you're doing this. So you just want to trust your tools, and that's it.
Yeah, I think
Yeah.
that's a really really important thing that we both kind of touched on in our own styles, is just like again, like some of the charts I showed, I said, I wouldn't touch this here because it's not perfect for me, right? And same with you. You're looking at that big breakout, and you're going, ah, shit, I sold it at 20 bucks, now it's at 60, but you're going, you know what? Like I know what it's going to do. It's going to come back down. I'm going to wait. I'm going to set my buy orders, on the levels that I'm comfortable with, and it just makes it, like you said, it's just stress free. It's just robotic. You don't have to worry about it. It's something that and you're waiting for.
Yeah, and the thing is, like, the hard things for people do become easy when you make them a habit. So like you have to make not chasing a habit, right? Because this could easily have not hit my 618 level, just took off, and I would have been like, oh shit. But the thing is, that wasn't the point of trying to catch the asset. The point was just to create this habit of not chasing, because over the time, if you want to make this a career, over the time, a span of time, 10 years, if all you do is chase, you're going to lose 9 out of 10, maybe 90 out of 100, right? So you're never going to be profitable. So if you keep a habit of this, every 3 stocks that does pull back to the 618, I do a nice 30%. Meanwhile, you're chasing and losing money. Like, which is the
Right.
better long-term sustainable strategy, right?
Yeah, I even had a couple of my buddies like over the past couple of weeks that they bought into like Dogecoin and GME, like just random stuff like that, and they're like, oh yeah, I threw some money into it and like made $300, and they're like rubbing it in my face, like trying to make me feel like I missed out or something. I'm like man, I don't care. Like I wouldn't have traded that anyways. Like I I do what I do, and that's fine. I'm happy you made a few $100, but show me that tomorrow.
You know what this just reminded me of? It's like the story of the tortoise and the hare. These guys that play GME and they buy the call options, they're the hare, like just take off, right?
Yeah.
But us, slow and steady, day after day, week after week,
Work
it's like,
along,
you know,
super
that's the,
boring.
yeah, it's work, but it's fun and it pays. And it really does pay off.
Yeah. Yeah. It's kind of weird because like I love trading. It's a lot of fun, but like I want it to be boring. Like I don't want to be excited on the edge of my seat there when I'm watching the charts. I just want to be like, okay, yeah, hit my levels. All right, yeah, sold out, made some money. Oh yeah, there. Oh, that one's going the wrong way. Stopped out. Okay, I was wrong. Like that's the way you should feel. You shouldn't be like glued to your computer, pouring
Yeah.
sweat. Like,
Yeah. And I don't know what amount of time, but it is just amount of time, right? So there's no like after 10 losses you're hardened. It's just something clicks after a while. You're just like, whatever. And when that day happens, that's when you start winning more than you're losing.
yeah, once you like completely stop caring about the money and all you care about is just looking at like like when I look at some of my charts, because I save every trade I do, I look at some of them and like I'll have a chart where I've made like 10% of what a really good trade is. And I'll look at it and I'll look at the arrows where I bought and sold or whatever. I'm like, man, I'm so proud of that. Like, that is just such a good trade. And I make nothing on it, but I'm way more happy about the execution.
Yeah, 100%. I actually only do that for my Teslas. On the 12-hour chart on the trading view, it's just pure notes, bought here, TFSA here, RSP there. Like, it's just, I want to keep a log of it. Yeah. Sometimes it's nice to have a scorecard.
Yeah. Like, I always track everything, just because, like, I know stuff you're doing involves a lot more, like, company research and longer term stuff. But the way that I trade, obviously, it's, it can get away from me pretty quick. So I got to keep track of every day.
Right. On that note, I wanted to touch on a subject. I was reading I was watching this video, actually, Malcolm Gladwell, and he reminded me of a bunch of books of his that I read. I've got like 8 of them. And there was a human fallacy that I didn't connect the dots with trading until now, but I thought it was interesting that I should point out. It's called resulting. So what that means is, like, actually a lot of gamblers will know this fallacy. So what that means is you judge the quality of your decisions based on the result of the decision, right? So if you made a decision and it was a positive thing, then you're like, oh, that was a quality thought process that worked, right? But that's actually a fallacy, because a lot of, especially with complex things in games and things of chance and probability, sometimes you just make the most perfect decisions based on the best data that you have available to you. And the world just says, nope, not going to happen, right? So if you base the quality of your decision on the result, you would have missed out on the fact that you did everything correctly. So I think it's really important for traders to understand, like, you really have to stop trying to wing it and use intuition. Like, you can develop intuition, but especially when you're starting off, you have to start looking, like, you found that one pattern that worked for you and you made it consistent, right? Because so then even the times when you're wrong, you're like, okay, that was the market. It wasn't me. It wasn't my system.
Right. Yeah, that's a huge confidence kick too, right? Like, especially when you're new and you don't really know what you're doing. I mean, I've studied charts for, months, and then I start trading the pattern, and it's working. It's like working. I'm like, okay, this is kind of working. Like, my data seems to be paying off. Then I start going a little bit bigger, and then a little bit bigger, and then, like, all of a sudden I take a pretty decent loss, not because I didn't have any risk, but just because my size was getting bigger. And then it's like, oh, well, that kind of sucks. Like, I thought that trade was, like, really good. I thought that, all this data that I have, and then you do it again and you lose again. And it's like, oh, what the hell? And then you do it again, you lose again. And then all of a sudden, like, you don't even want to play that pattern anymore. And you're just like, fuck, like, what's going on? Like, does this actually not work? Like, what's happening? But, the thing that I think really comes with time is the reality that markets change to a certain degree. I think, the main patterns, the main setups still work, but there's variances in them. So, like, for example, if you have, like, a really bullish market, let's say, you're shorting like I do or whatever, and I'm trying to short a bounce. In that kind of situation, like we drew our lines, maybe if I know the market's been really, really bullish and I've been getting blown out of trades a couple times, maybe I'll start moving up to those next set of lines because my thesis might still be correct, but it's just going a little bit further now, right? That's one of those things to keep in mind. The other thing that, really took me a while to realize is that all your trades aren't necessarily going to work out. And like you said, you might be right, but let's just say, you have a setup that, works 80% of the time. That doesn't mean, I think I've mentioned this before, it doesn't mean you're going to win 4 and then lose 1 and then win 4 and then lose 1. That 20% of failures could come for 2 weeks straight. You might lose that trade every single day for 10 days. And then you might win that trade every single day for 4 months. Right. So but if you're losing that same trade every day, day after day, then, like, it's tough not to take a huge confidence hit and be like, oh shit, like, do I really know how to trade? Is this pattern even valid anymore? But it's, that's again, it's one of those psychology things. You got to step away and take a breather, just start charting again, and figure out what's going on, whether it's you or whether it's just, it's just a matter of the markets, or whether it's just these particular trades are just having a bad little week.
Yeah, I think it's really important for people to get insight on their own thought process and figure things out. Especially, like, you collect a lot of data, like, of all your past trades and things like that. Keep a log. I don't, but I really should start doing that, because you're the second guy I've heard that. I just heard it from another. He's a hedge fund guy, and he was, like, saying when he first started out, they noticed that they were just barely breaking even every year, and, like, even on a good year they make a little money. On a bad year they barely break even or lost something, right? And it wasn't until they started looking at their books and they were like, looking at every trade that they made, they realized that 80% of the money came from 20% of the trades. So they're like, let's see what we're doing right with this 20%. What was our indicators? What was our thought process? And let's just focus on those. And as soon as they cut out all the other crap and just focus on the winners, they started winning consistently.
Right. I even mentioned that to you, like sort of similar. You know, we were talking about, you know, Bitcoin and stuff, because like your day trading, so to speak, is basically only in Bitcoin, right? So you're like, oh, maybe I should get into these things that you play and stuff like that. And I was like, honestly, man, if you want to learn, that's fine. But there's like, you don't have to feel like you need to do something else. Like, and then I said, you know, like guys back in the 80s or whatever, they would do their whole career trading only coffee or like only lumber. Like all I trade is lumber, right? And you make a whole living off of it. So you don't need to do everything. And that was a huge growing point for me just over the past year. Is I was always trying to do everything because I felt like, you know, like I see these moves and I'm like, oh, I'm missing this. I'm missing this long play. I'm missing this short play. I'm missing this. I'm missing that. But until I got to the point where, you know, I go into the morning and I'll have, you know, maybe 2 or 3, maybe 4 stocks that I'm really watching, and maybe I'll get one trade out of it, and that'll probably be my whole day. Or, you know, maybe I'll get no trades, and then I'll just, you know, shut everything down. I won't even look at the charts for the rest of the day, because that's what I found works out for me. I focus on the setups right now that make me the most money. And if there's other setups, I know all it's going to do, I might make a buck here or there, but all it's going to do is drain my mental capital. I'm going to be more tired. I'm going to be exhausted. I'm going to be less confident in the trades that I do know that work. And you know, it's, you got to kind of weigh the pros and cons. Like, is the extra, you know, 10% of overall profits you might make from staring at the screen all day and trying to hit everything really going to be worth it? Like, just on your general well-being?
Yeah, actually, that exact thing happened to me. It's when I started turning the corner. Like I told you, I blew up quite a few accounts playing the futures, Bitcoin futures, and it was because I was trying to play every move. Because every move felt like an opportunity. I'm like, I'm missing an opportunity. I'm missing an opportunity. So I try to play every move, and that's when I kept getting my ass kicked. And then it's when I told myself to step back. I'm like, all right, just wait until you see something and you like it, and then you play it. Not because you're missing a move, but because you like what you're seeing. It makes sense to you. Then play it. And then I started winning a little bit more.
Yeah, it's so much better for the confidence too. And like the nicest thing about that is when you do get those moves like you're talking about, instead of, you know, like, because you got to think of your risk too. Like, you know, let's just say you don't want to lose more than $200 in a day, for argument's sake, right? Let's say your risk on each trade is $50. So if you lose 4 trades, you're down $200, and you know you've lost 4 times in a row. You feel like crap. You know, it sucks. It's exhausting. Or you can focus on that one play that you're really good at. You can throw way more size into it. You can lose once and be down $200 and be like, ah, man, that sucks. I lost one trade, down my $200. We'll call it for the day, move on, come in the next day. And if you're risking $200, you're probably looking to make like 800 or 900. So, you know, you win that twice. That's going to feel a lot better than these little $50 trades that are just like, you know, picking away at you. You're trying to make, you know, $100, and then you're losing 50. Like, it's just, you know, it's like just nitpicking away at you. You just want to look for the best setups, just hit it. You know, if you lose, but you know, you're probably going to win more than you lose because it's your best setup, right?
Yeah, for like a 12 to 18 month stretch, I was literally in hell because I would be making those like $25 to $50 bets and I'd be winning, but every time I lose, it would be like $300. It was just like kill like a week's worth of work or 2 weeks worth of work, and it's just like so depressing. It's like I'm right more than I'm wrong. I still can't make any money.
Yeah, I know. I posted that on our story the other day. I said, you know, you can be right 40% of the time, and you can still be a very profitable trader, right? It's just, you know, you got to risk management and plan your size accordingly. But you can be right 80% of the time and not be a profitable trader. I remember I was in a chat room once, and this guy posts, he's like, you know, he posts his stats, and like I saw it pop up, and I think he was right. He was winning his trades like 87% of the time, but he was winning like 50 or $60 a trade, and then his losses were like $1,200 or $1,500. So overall he was losing a ton of money.
I think I know what that is because I've experienced it. It's like when you have such a high win streak, you can't accept that you're wrong, and so you ride those losers to the bottom. Right. Whereas if you go into it knowing maybe you're 50-50, then you're more cautious. You got, you know, you're going to act on the outs. You're going to be aware of when the game, when the price action goes against you and stuff like that. So it's having a good record might be a bad thing.
Yeah, it can be. I know a lot of guys always say, their biggest losses come after their biggest wins, right? It's like, oh,
Yeah,
I'm invincible, nothing can hurt me, and then you throw a whole bunch of size at a garbage play. You know
yeah,
what else is
100%.
really tricky though on like that whole risk management thing is when you have a play you're in, you stop yourself out because you're disciplined, you're smart, and then all of a sudden it goes back in your favor. Now you have to not be frustrated and buy in or short sell and chase it down and then get blown out again and then does it again and then you get blown out again. I've been stuck in that too where I go into a play and then it dips, I will go into a long play or something and it dips down and knocks me out. Then it comes right back up. I'm like, fuck, I was right. Then I'll buy in a whole bunch more and then it dips down again and knocks me out and then it keeps going up and I'm like, it just drives you completely insane.
Yeah, I've noticed when you've had a few losses in a row, you need to get away, just walk away, because something about the price action is mesmerizing. It lulls you into like the wrong side of every move, right? When you short, it goes long. When you go long, it goes short. You're just like, what's going on?
Yeah. And then in your head, it sounds easy because it's like, oh, okay, well, I'm just wrong every time I buy a stock, so I'll just short it wherever I think I should go long. And then you start doing that, and then it goes in the opposite direction again.
Yeah. You can't. Those are like emotional decisions. Definitely a no.
Yeah, I know it's tough. Like I remember I read this book, The Daily Trading Coach. I think I recommended that to you. It's like, and one of the key takeaways I took from that was like the guy was saying, he's like, you gotta talk to yourself in your head like a good sports coach would. So like if you were sitting there, you don't want to sit there and be self-destructive. You got to think like, imagine someone standing behind you who's like, no, like, it wasn't you. It was just a mistake. Don't worry about it. We'll get him tomorrow. Just all that crap that the coaches always tell you to pump you up before a game or if you're having a hard time or whatever. Try and talk to yourself like that if you're having a rough time. And it can be a big help. Like it sounds kind of silly, but it really can help you a lot. Especially, you're sitting at home alone in front of your computer. It's easy to just start getting down on yourself when you're not making a lot of money. Or when you're just losing, right?
Yeah, I think there's something to that because I know there's tons of research out there that says people behave differently when they know they're being watched.
Yeah.
And so if you just kind of talk to yourself, maybe that has kind of a similar effect where you're watching yourself. You're like, okay, don't be stupid. There's an audience here. We'll laugh at you, Sorry for the cutout. We had some technical difficulties, but yeah, we're coming to the end of our episode, and so we've been getting really good feedback from you guys, and the majority of the feedback is that we should go more basic. We're kind of running when we should be walking for you guys. So I think for the next few videos, maybe we'll go backwards and do like some tutorials. I think the next one, I just made an interactive brokers account, haven't touched it yet, and I'm gonna have Kaylin kind of walk me through it because he knows the platform, and then through that way you guys can learn how to navigate the platform too, because I'll know what questions to ask. And that's about it. Anything else, Kaylin?
No, I'm good, man.
All right, that's it, YouTube. Thanks for joining.
Thanks. Remember to like and subscribe.
Yeah.